Good afternoon, Matt. Thank you so much for joining in. I'm Amit. I'm the host here at Unariya Short Story, a non-profit knowledge-based podcast focusing on short stories that are relevant to youth right now. The topics include entrepreneurship, stocks, crypto, and whatnot. Most of the people that I interview believe in free education and life skills, and also in well begun is half done. Handling money, in my opinion, is a very important topic in current times, especially in the US setting, as millions of people every year from different businesses and services try to make their fortune here. Thank you so much, Matt. I think you are the right person to talk and discuss further of this topic.
Yeah, thank you so much, and thanks for having me. Grateful to be here and share what knowledge I have, and hopefully spread some of that around a little bit.
Just to give you a backdrop about Matt, Matt has been a Pennsylvania guy, and he has had previous experiences with Penn State where he came for completing his petroleum engineering.
Yeah, back for more, so just couldn't stay away. 6 years later, came back for the MBA.
6 years later, okay.
Yeah.
When you talk about personal finance, how does a person decide?
Personal finance goes, it's really of the utmost importance, right? And so not only does it dictate your present life circumstances, but also helps to determine what the future of your life looks like, what that means for your kids, grandkids, et cetera, and building that legacy kind of wealth, right? And so that's kind of the mindset that I'm in. I think a lot of people should be in that mindset. I've done a good bit of investing. I've started right away after undergrad.
Coming from India, I have not understood personal finance a great deal because frankly, there's not enough money in the market for youth to handle. And most of the operations, be it education, healthcare, travel, are usually parent endorsed. First question to you would be, how early is the concept of personal finance imbibed?
It really depends from person to person, family to family, I think. I think that was something that my parents did really well, and they ingrained that into me very young. And so, it was always under my mindset that even during, part-time jobs in high school that I had and my internship during college, that I'm not going to make that money to spend it all. I'm going to make it to save and to invest in something later. Right out of undergrad is when I began investing into a 401k and setting money aside to put into, and if I can, max out a Roth IRA and open other forms of investment vehicles and trying to diversify where my money's at and what I put it in. And so I couldn't tell you what the average age is that people start. I'm sure it's unfortunately probably later than it should be. It's compounding interest, right? So the earlier you get started, exponentially speaking, the better it's going to be in your later years. The difference between someone who begins investing a reasonable amount at 22, they're going to end up with a lot more perhaps than someone who starts at 30, even if they make a higher salary at 30. So, it's crucial to get started right away as soon as you can.
When we navigate the first few years of our life, an important milestone in that particular time frame is education.
Yes.
Did you learn it the hard way, had to pay a lot of debt? How has the debt scenario been?
I'm very fortunate where I actually didn't have debt for my undergrad. So I was my parents were able to pay my way through undergrad. So I graduated debt free, and I'm able to take everything that I don't need from a living standpoint, day-to-day expenses, rent, et cetera, and invest that money. And so, that is a huge problem right now in the U.S. though, in terms of just getting buried under debt. You have, runaway tuition over the last several years, several decades, because of a number of factors.
Thankfully, you're not part of that.
Fortunately, I'm not, but I mean, a lot of people are. But for people that are under that circumstance, there are means to get out of that. I think, making wise job choices in the first place is first and foremost. But second, any chance you can get to refinance that debt is going to be beneficial to you in the long run.
When I came here, I started listening to Dave Ramsey. I think a lot of his investment style, philosophy makes a lot of sense.
Yeah.
And he talks strongly about student debt, about car loan debt. Looking at our class, I was fortunate enough to get a scholarship, but that comes with a work experience of more than 10 years. What's your story on how to finance education?
I mean, of course, you want to seek out and try to obtain any scholarship you possibly can. I'm like you. I'm fortunate enough to come here with a scholarship, and I think it should play into others' decisions in terms of what school they potentially choose as well. For instance, like you mentioned, I came here for undergrad, and so traditionally speaking, a lot of people don't come back to the same school for an MBA. They went to an undergrad. They try to mix it up, diversify, what have you. The reason I chose to come to Penn State was because the scholarship I received here was substantially greater than these others. I received scholarships at other schools, but to me, the value of going to a different school and having just a different name on the resume wasn't worth putting myself into any kind of debt or taking cash out that I could otherwise be investing. That's the one thing, that nice thing about the U.S. is that there are a lot of scholarship opportunities. So, especially speaking to a foreign audience, right? I think a lot of schools prize that diversity that comes from something like that, and I have to imagine there are a lot of grants, a lot of scholarships available that someone that has that kind of background, because that adds so much value to the class pool in terms of the experiences that they bring in, the problem solving abilities they have that are different from your typical American. I think just using the tools at the hand, talk to the schools, do research on the internet, whatever it is, to just seek out those scholarships and apply for them. And are you going to get every single one? Probably not. But if you get a few, you chip away at that price. That's gonna add up and be beneficial in the long run, right?
Yes. To our topic, which is how to become a millionaire. If you're trying to lay out a plan, $100,000 is 1/10 of a million. Right. So if you're able to save it, if you're able to make it, it's 1/10 of the burden gone, right?
Oh yeah, they say the first $100,000 is the hardest to make.
Are the hardest to make.
Just because you figured in that time period, you're trying to get on your feet. You're trying to go through the motions of life. You're trying to buy your first home, buy a car, finance a wedding, or have kids, whatever it is. And so once you can establish that first $100,000, then it's easier to move beyond that, because then you have wealth that's built up that is not going to be taken out for life expenses, right? It's going to be used for other investments. So yeah, that's obviously the goal. To everyone wants to become a millionaire, and there's 22 million millionaires, I think,
22 million
in the United States, right?
Yeah.
And so the opportunity is there, and the best part about that is that you don't need to have some kind of executive type of position to get to that point. Actually, you speak of Ramsey. I heard a story on his radio show not too long ago where a listener called in who was enlisted military and spent his whole career there. And then after that, he went and he was a janitor at a local school, I believe, and ended up retiring recently. Never made over, I think, 50 or 60 grand, but he was worth, I think $1.5 million just because he was smart with his money, right? He invested
and consistent.
Invested wisely. Yeah, and he lived below his means, which I think is crucial, and one thing that's certainly helped me along the way as well. And didn't spend money on needless items, if you will. Stuck to the essentials. But really, I think living below your means. I mean, anyone can be. Most people could probably become a millionaire if they stick to just basic principles of wise spending, investing, living below the means.
And to that point, what about spending? Because on Dave Ramsey's show, I heard a person who was, I think, 55, about to retire in 5 years, and had $3 or $4 million of real estate worth, and then he called to ask for advice as to how to spend money. So all these are success stories. I personally see value in.
No, definitely. It's funny you say that. So I guess I advocate for. Frugal maybe is a strong word, but I think, being wise, disciplined in your spending, right? Avoiding those needless items. And I think that goes along with living below your means. I recently had a conversation with my financial advisor who told me that I need to live a little and spend money, which is coming from a financial advisor, maybe is a little saying that I'm over.
It's a win.
Maybe I'm overdoing it, right?
Okay.
Maybe I'm going a little too overboard with the savings, because you have to enjoy life too. That's certainly part of it. And I think my career and just the nature of being in oil and gas for so long, it's kind of made me, whether I like it or not, to be frugal, because when you're working these types of jobs, when you're out in the field, you're gone for months at a time. You don't even have the opportunity to spend money. And so it just becomes part of your lifestyle that you just don't spend money. And it's easier to save that way. Look at resources like Dave Ramsey, for instance. He's, I think he's great in terms of helping people that were previously swimming in debt to control their expenses, control their spending, and find that path out of that hole that so many people get stuck in and cannot find their way out. Having that realization, having that self-control, I guess. Use the resources you have available. Talk to people, do your research on the internet on ways to get out of these things.
When I talk about the basic 3 investment philosophies, first being the conventional stock, the arrival of crypto, and there has always been the real estate beast. So what's your take on that? How is the market changing, and which boat are you boarding?
You know what? It's such a dynamic world right now, given the nature of the markets, the geopolitical events we have unfolding across the world. Traditionally speaking, I think your best bet is probably stocks and types of equities and securities like that, whether it be ETFs, mutual funds, my philosophy is have a little bit of everything, diversify. I've got a portfolio where I've got, I think 45 some individual stocks, 40 some mutual funds, a number of ETFs, some cash and cash alternatives on hand. And then I also real estate, I do that as well.
So are you evolving in terms of a portfolio manager?
Yeah, absolutely. Okay. So actually recently I actually just sold off 25% of my equities portfolio to put more into real estate. Just because I saw an opportunity there, and I see on the horizon probably some serious trouble in the equities market, given an inverted yield curve, given the inflation that we're seeing, commodity prices soaring. I think at some point you're going to see demand destruction. And so I think when I say short term, maybe 1 to 2 year range, I think the risk of recession is quite high here in the United States.
Right now.
Personal opinion. But
Okay.
right now, I'd say. And so, what I'm doing is I'm being a little nimble with my investments, and I'm saying, okay, where can I put that money to work where I can still find a good rate of return while also kind of insulating myself from the broader market? And to me, that's real estate. I'm essentially
Any particular real estate market? I understand that Texas is hot right now.
Yeah.
But then I'm trying to move to Orlando, and when I look at that market is hot as well.
Right.
I came from California. California has always been the hot market. So is it a common phenomena which is floating around in the whole of the U.S. or?
Nah, it's really not. It's interesting you ask. So funny enough, there are some markets that are declining. Pittsburgh and Baltimore, for instance, they've seen a net decrease in population, and you're seeing more homes being put on the market. Whereas places like you mentioned Texas, Orlando, my investments are primarily Charlotte, North Carolina.
And reason being?
So a friend of mine started a business down there. I got him started essentially. I helped him get started as almost like an angel investor, if you will. But since then, the business has grown pretty substantially. To your question, as far as why this specific area, why I'm choosing Charlotte specifically, in addition just to the fact that he's there and the company's there, is that it's a great market right now that has experienced tremendous growth in terms of population. You have a lot of people moving from New York, from New Jersey, elsewhere in the Northeast to a state that has lower taxes, better climate. You have financial institutions that are moving to Charlotte in a big way, among a number of other companies. So you're seeing a seller's market. You're seeing a huge demand.
Interesting. Is it a safe ride or?
No, it depends. It depends who you are in that market, right? If you're staying in it for the long run, if you're thinking, more than just a year out or 2 years out, then you're probably pretty safe. The U.S. real estate market has grown, I think on average, 4.9% per year since I think the mid 80s. So you're seeing, pretty positive returns. And that's of course been very, very strong growth in the last couple of years. And I think the reason why I'm pretty bullish in the real estate market is because even with interest rates rising, they're still below their historical averages. And on top of that, with inflation, the real rates are still negative, which would incentivize people.
How do you manage a real estate property in a state or a territory you're not living in?
Yeah.
Have you faced that problem, or is that a problem even?
So I wouldn't say it's a problem. There are resources for that. So you can get property managers to handle that. So that's actually something that I've been thinking about in terms of my coming job with Chevron. I'm going to be in a 2-year rotational program where I have 3 rotations, 8 months apiece. And essentially every 8 months, I'm probably going to be moving somewhere else in the country. And, to me, I think it makes a lot of sense to look at either purchasing a house or like an apartment or condo. And when I move, using that as a rental property. But how am I going to do that if I'm halfway across the country, right? You can find resources like property managers that will take care of all that. Of course, there's a fee involved.
Like 10%, 20%, 30%?
I don't think it's that high. I think it just depends. Don't quote me on this, but I think the numbers I've heard 10, 15%, somewhere around there, probably. From an entrepreneurial standpoint, I think it makes a lot of sense because
obviously you cannot be everywhere.
No, but at the same time too, you're going to be moving somewhere else. You're presumably going to be buying or renting a property somewhere else. So if you buy somewhere else, but you have a property located in another city, say as a rental or what have you, you're effectively diversifying yourself. And so even if the property
That's
market,
a good way to look at it.
Yeah, even if the property market, say, is a pretty safe bet, you still want to be diversified. You don't want to put all your eggs in one basket. And so, over time, if you can find a company that, say, works across the country, or find people people you can recommend in different cities, maybe you do want to have rental properties spaced out across the country. Even if you can't be there physically as a manager, as an owner, I think I would personally feel more comfortable with that in terms of risk management standpoint, just because, like I mentioned with Phoenix or Denver or Charlotte, what have you, not all markets move in the same way at the same time. And so, if you take a hit, say in a volatile area that's like Phoenix, for instance, well, maybe if you have a property in, say, Denver or somewhere like that, maybe you don't take that hit. Thinking about things in a diversification standpoint, especially when it comes to property, is not a bad idea.
Are you learning all this smart stuff in the real estate classes recently?
I don't know about that. I try to...
have they been of value?
Yeah, no, I definitely think so. So, I've been doing the real estate investing for 4 years now.
Interesting.
But I will say,
so it was a calculated move.
Yeah, it was. Speaking to the classes themselves, I've renegotiated deals over the past couple of years. I've got 2 active contracts right now. One just finished up, and I've got one that's going to be coming due next January, and another one shortly thereafter, or the master's real estate program. The class has been very helpful in terms of understanding not just the principles behind it, because I think you can look that up, but even just understanding the terminology and just being able to have those higher level discussions that I think make you a more serious investor, help sway negotiations, because a potential borrower perhaps might say, hey, this guy or this girl or whoever knows what they're talking about, has done their research, done their homework, and we're going to have to give them a fair price if we want their cash. To answer your question, I think it's been very helpful, but I think, a lot of what I've learned over the last several years has just come from individual research, just on the internet, reading various publications, whether it be Wall Street Journal, Bloomberg, Financial Times, Investopedia, to name a few. Even just YouTube. There's great instructional videos on there, people talking testimonies, etc. Maybe one of the most important things that I did, especially early on when I was like 22, 23, when I didn't have a lot of cash, was my Halliburton 401k was through Fidelity, and so I had access to the platform. With Fidelity, for instance, you don't actually have to put any money in. You can just open an account for free, and you have access to their tools. It's a great platform. You especially like their advanced charting features, their research features. What you don't understand, you can Google. They have tutorial videos on their platform that you can use, and just spending some time, whether it's just a couple minutes a day, an hour a day, whatever, learning the ins and outs of the tools to be able to, look at technicals and look at, trends and momentum with stocks, what have you, and seeing how money is moving in and out of these funds, whether it be mutual funds, ETF stocks, what have you, I think is highly valuable, and it gives you a great perspective. It helps you to form to kind of get that pulse of the market, if you will, which I think is crucial from an investment standpoint if you want to make wise decisions in your investment choices.
Talking about the pulse of the market has been pretty erratic, at least for the last few weeks. Yeah. And it has been shameful on humanity's part to see Ukraine in such a situation and not being able to do anything about it.
Sure.
But at the same time, I think this global event is causing hiccups. It is causing shockwaves into our daily lives as well, right?
Absolutely.
The fuel is high in prices. I think we're seeing, as we were talking about, we were seeing California prices here in Pennsylvania in 2022, and the numbers are increasing every day. You being an oil and a gas guy, what is your take on the current trend?
Yeah, I mean, so today we saw a slight pullback in price. WTI was somewhere around 106 a barrel. Brent was around 111 off their recent highs. Brent hit $139 a barrel just a couple weeks ago, which was close to their all-time high back in 2008, right?
$139 a barrel.
Yeah, so quite substantial. There's a lot of reason to believe that I think oil is going to go substantially higher, especially in the coming months. You have a number of factors working. Of course, you mentioned Ukraine, right? You have huge disruptions from Russia. So you're looking at something like 2 million barrels a day of disruptions coming from, or not coming from Russia, if you will. You have,
and this impacts primarily Europe, US.
Primarily Europe, and
Asia.
Yeah. So, I mean,
so this impacts everyone.
Everyone. So we'll start with Europe. So, the UK has said that they're going to stop importing Russian hydrocarbon, right? Germany is of course, Europe's largest economy, has not cut them off, but they're looking to eventually phase them out. And so they've announced that they're going to start constructing LNG ports on the northern coast to be able to take in LNG from other parts of the world. The U.S. was previously taking about 600,000 barrels a day from Russia.
Can we replace that from some other country?
So that's where it gets complex, right? Before the pandemic, the U.S. was producing about 13 million barrels of oil per day. we're doing about 11 million now, despite the fact that demand has come back to its prior levels, in some cases higher.
Production has reduced.
Yes. Yeah, it has not replaced demand, which is why you've seen the increase in prices. So in terms of the U.S., it would be great to replace that, right? Because beyond a certain point in price, you start seeing demand destruction. And so traditionally, it's been thought that number is somewhere around 140 a barrel or so. Well, I don't want to scare you, but Rystad Energy, Bank of America, and I think Goldman came out recently, and their upper limit on their price projection for oil this summer is above $200 a barrel. In fact, I think Rystad...
Interesting.
Yeah, so I think Rystad actually said $240 a barrel on their upper prediction. And so you figure, how's that translate into gas prices, right? Well, you're looking at $8, $9, $10 a gallon. And who's going to pay that, right? No one's going to pay that. And so you're.
And do we see any government subsidies acting
at
that point?
I don't know, because I think the problem is that will not be sustainable. It's not going to last long term, because you're going to have the demand destruction. You're going to have people that are going to begin, changing their behavior because they simply can't afford to live the lives they lived prior with those prices, right? And so what happens then? Well, I mean, nothing good, right? With demand destruction comes a slowdown in economic activity. And so you already have the Federal Reserve here they've already begun raising interest rates. You're going to see quantitative tightening soon. You're going to see likely more aggressive rate hikes. They've mentioned that they would do so even if it means intentionally slowing the economy to get a hold of inflation. And that's going to drive commodity prices higher. And so between a slowdown from the monetary standpoint, from a slowdown from the commodity standpoint, that generally translates into recessionary types of environments. And with an inverted yield curve on the 5 and 10 year, the 7 and 10 year, the 5 and 7 year, in some cases, and over the last several days, typically speaking, that is almost it's always a precursor to recession. Whether that be, it's not necessarily right away. It could be 6 or up to 24 months away, perhaps. But I think higher commodity prices certainly acts as a catalyst to accelerate that.
They do. And when I came here, I could not help but realize that, like the difference between Indian currency and US currency, right? And right now it's $1 for 75 odd Indian rupees. And whole of my life, I have seen inflation impact commodity prices. And how eventually it impacts the erosion of currency value.
Yeah.
So I remember starting off, probably the earliest of my memories are conversion being, say, $1 for 10 rupees, something like that. And then the inflation being high, sometimes hitting double-digit figures in India. And all that over a period of last 20, 30 years have made the rupee devalue to such a great extent. And that's what we see in a lot of countries. When I talk to JS about it, a fantastic country, right? There is no problem with South Korea. Still, their currency is so devalued, and a lot of credit can be given to consistent inflation.
Absolutely. And I guess, from an emerging market sector such as India and South Korea to some extent, there are potentially pros to that, right? It certainly helps manufacturing because it makes their exports more attractive to other countries. So from a growth standpoint, it can be helpful, but you're right. The buying power is hugely detrimental. And, I don't think, though, of course, the U.S. is the leading world reserve currency, it's taken hits recently with inflation. Some analysts are projecting that next month's CPI numbers could be double digits. We could see 10% CPI number here in the United States, and
which is crazy.
It's crazy. Yeah, we haven't seen that in since
decades,
80s. Okay. Yeah, so you're talking 40 plus years, right? And I think what's interesting too is that because of the situation, the war in Ukraine, the disruption from the Russian standpoint, they're selling their Euro oil and other types of oil at a vast discount, right? So you're talking. They're selling oil for $30 below spot price right now, just trying to get buyers because one, it's obviously not a good political look if you're buying from Russia right now. Of course, you're effectively funding a war.
Yes, a war.
However, you do have some takers, right? So, for instance, India has recently bought. China is looking to do major deals, and Russia actually recently proposed just last day, they proposed to Europe that they want to have them start paying for oil and gas in rubles. they're the G7. So they wanted the G7 to do that. And they've since said no, they're not going to do it. But point being is that you have countries that are looking at the situation. Okay, so you're looking at China, you're looking at India, you're looking at even Saudi Arabia and China right now are working deals where they want to start dealing in other currencies outside of the dollar. And when that begins to happen, the U.S. dollar is going to inevitably lose value, because part of the value that it holds is the fact that it's freely traded and it's convertible and it's accepted almost everywhere, right? Major moves in the market with commodities that are being traded in yuan or rubles or rupees, what have you, then that takes a bite out of the dollar, and so that could actually devalue the currency even further.
But still, I feel there is hope for the world. This is a very troubling time, and a lot is at stake, right?
Oh my.
People are talking about all kinds of possibilities, but still at the same time, I think we have to look at the future with hope. There are a lot of intelligent, calm individuals in this world.
I
right?
think so too. And I mean, it's easy to focus on the bad, right?
On the bad.
I think even speaking as an oil and gas guy, thinking beyond just oil and gas, especially with the Russia situation, I think a big problem that I don't know is necessarily priced in at this point would be the food issue. So, with Russia and Russia and Ukraine not only being huge exporters of wheat, they're also Russia in particular is a huge exporter of fertilizer, which is a derivative of natural gas, right? And so with natural gas prices already high, a shortage of fertilizer because of, the lack of exportation, that's going to drive prices even higher. And so from a crop yield standpoint, you're going to be down. Looking at the exportation of wheat, well, if you're not having those exports, if Ukraine isn't growing wheat this year and Russia's not exporting their wheat, what are countries going to do, right? They're going to have to look for alternative sources. So maybe they switch to the corn or to rice or some kind of substitute, right? But the problem is if you already have lower yields because of a lack of fertilizer availability, those prices are already higher, and then you couple that with substitution effects, well, then prices go even higher. The sober reality of that is that, you have roughly half the world's population living on less than $5 a day. How does someone afford that? What are the effects of that? You have something like 700 million some people living on less than $1.90 a day in extreme poverty. Forget inconvenience to have to pay $4 a gallon at the pump right now. Well, there's gonna be a lot of people out there that can't eat. There's serious issues out there, and so we're gonna have to be innovative. We're gonna have to think of ways to supply these countries. And
changing gears off the interview a bit, let's do a bit of a rapid fire.
Yeah, sure.
So let's see how that goes. To start with, was Chevron one of the top 3 target companies in your job?
Yes.
Okay, which is incredible, right? What were the other 2 companies that you were targeting?
Yeah, so it's funny you say that. So being a petroleum engineer, having success in that field, you would think it would be intuitive that I would just naturally gravitate and continue my career in oil and gas. I actually thought of changing that up. When I first came back to the program, I was thinking about looking at finance, maybe some banking entity or aerospace and defense, actually. And sure enough, a month later, I'm signing on the dotted line for Chevron. But no, I think it was certainly in the top, because the way I see it.
I saw the drive in you. I mean, when people talked about Matt Hall, they somehow always related Matt Hall to Chevron, or he's going to make a big name in some big oil company, right?
I hope so. I hope so. I think it's a safe company, and I think they've got a lot of promising projects on the horizon. But with Chevron, looking ahead from oil and gas, I think, unfortunately, a lot of the smaller companies are either be phased out or undergo mergers and acquisitions.
Big fish eat small fish.
Yeah, they're going to have to. I mean, you have banks, you have creditors that are moving away from oil and gas in terms of trying to prepare for ESG scoring and to be in good terms with larger investors such as BlackRock and what have you, or just E&G investors in general that want to have their investments outside of oil and gas from an environmental standpoint. So point being is that you're seeing a harder time for companies to secure financing, and that's going to most directly impact the smaller companies, because they're going to be the ones that are less diversified. They're going to have less debt that they can take on. They're going to have to give up more equity. It's going to be more costly for them, and it disincentivizes companies from wanting to expand, to take risk, right?
Okay.
And so you're going to see the larger companies see that as opportunity. They're going to see opportunities to scoop up, land at a cheaper price, or existing assets, existing wells at a cheaper price.
When you received your offer letter for Chevron, where were you? What was the emotion?
Yeah, so I didn't know what to expect. I was back home at that point, so we had a kind of final wrap up the last week we were in Houston, and they told us that they would kind of let us know in a few weeks time. So I was already back here and got the call and very excited, of course. We really didn't know how many people they're going to take. It's interesting. Chevron's a huge company, but the hiring in oil and gas in general has been very tight in the last several years. And so even the group I was in, I was with 5 other guys, and the MBA program as a whole, I think, had something like 20, 25, and this is across the entire company, right? And so we heard stories, they're going to take one person, they're going to take 3, whatever, out of the 5 that we had. And so we didn't really know who was going to get chosen or
were your parents happy?
Oh yeah. Yeah. They were excited. They've seen the success that I've had in oil and gas, and they want that to continue. It makes for maybe a more volatile type of lifestyle, but I kind of like that.
And how was your journey through MBA and to Chevron? Was it easy, moderate, or were you burnt alive in the process?
No, it's so funny. I don't want to come off as like bragging in a way like this, but the job I had with Eclipse, it was extremely, extremely stressful. Just because I had so much riding on me personally in terms of the actions. A mistake on my end could cost the company $1 million, right? Easily. And on top of that, I had 30 to 40 people's lives in my hands, essentially, based off of my actions. So if I make a mistake, see, people can get hurt or killed, and it happens every year. People get hurt all the time out there, and unfortunately, people die. And oftentimes, those are preventable mistakes. Sometimes they're freak accidents, but oftentimes, just bad decisions. And so you have to constantly be on your game, and you're working, anywhere from 12 up to 24 hours a day in one shift, nonstop. And doing that for weeks, if not months on end. And so you always have to be on your game. You can't let up.
Interesting.
And so coming here,
has your game improved after Smeal? Then I think that's the next obvious question.
Yeah. I don't know. I think, for me, like I wasn't stressed out for the first year, because I knew if I can handle that, then I can handle anything moving forward. I'm kind of taking that actually in my career moving ahead, where it's like, I want to take on the tougher assignments, the things that people don't want to do, because 1, that's what got me to where I was at in the first place. But 2, I know I can handle it. I know I've got the capacity to deal with it. And does it shave a few years off my life in terms of stress? Maybe, but
it's worth it.
I think so. So your next
why retire at 60 when you can retire at 40?
That's
45,
right. That's right.
Are you a millionaire right now?
Not yet.
Okay.
Not yet.
Like when I see you, when I talk to you or Sean, that has always been a question that I wanted to ask.
Well, I tell you what. So I mean, just because unforeseen events happen, if you would have asked me that when I was 28, I would have told you that I would have been a millionaire before 30, because I was on that pace.
Okay.
Now, with change of plans in terms of career, I've pushed that back to, I think at this point, I would say 3 to 5 years I should be there.
3 to 5 years.
Yeah.
That means by 2025.
Yeah, so hopefully on the lower end.
Interesting. That will be a diversified portfolio.
Stocks, real estate, ETFs, mutual funds.
Some cash lying up in Cuba in a box.
Yeah, that's the thing too. And I guess maybe from an investment standpoint, right now it's not the time to have cash, because it's just sitting in the bank account, you're losing money, and you want to put that to work. I think too, I think hard times can incite creativity. And so if you see trouble on the horizon, now's the time to look and look for alternatives and take action.
And from an entrepreneur's point of view, if we see this equation, then how do you see it unfolding? I mean, like in terms of supply chain issues that erupted through pandemic and now have been aggravated through the war, is it a good time to do business, make money?
So I kind of see this going one of 2 ways. I think over the last couple of years, and especially since the pandemic, with the supply chain issues that we've had, people have seen the vulnerabilities of having, too much reliance on foreign countries that are halfway around the world, right? And so the knee-jerk reaction has been to, okay, well, we need to bring that manufacturing home, or be more reliant on closer nations. But I think what that does is it removes the globalization of the world, right? Like that movement ends up inevitably.
Are you in support of that?
I don't know. I
Can
think
that happen?
Like look at poverty since the 1970s, right? I mean, world poverty has been hugely reduced, and I think a lot of it has to do with, opening up of various societies and interconnection and making, like, for instance, a lot of Southeast Asia, like U.S. relies so heavily on Southeast Asia for manufacturing, and a lot of countries have built middle classes based on that, right? And have brought people out of poverty. Then, you remove that source of income for a lot of countries, a lot of people. So I think that has some ramifications that are pretty troubling. I think the better solution, and from my opinion, it goes back to what we were talking about before with investments: diversify.
Diversify.
Yeah, I mean, from a semiconductor standpoint, right? It's something like 70% of the world's semiconductors come from Taiwan and South Korea. That's, to me, that's a risk because you're so reliant on a small portion of the world. It's great to have manufacturing elsewhere and have it domestically, but I think you have to spread it out. And I think that's what countries and companies are going to learn.
And nobody ever noticed it, right? The Taiwan issue.
No, because that's just one example.
Good.
Yeah, going from a geopolitical standpoint. Well, look at Taiwan, look at South Korea, look at their proximity to China, which has become increasingly aggressive over the last couple of years. I think that's a great vulnerability, but that's just one example. And so I think from an investment standpoint, I think it makes sense. I think
that's one example, but there are definitely patterns. The rise of a more territorial politics in terms of a more strong identity for an Indian and for a Hindu. And at the same time, you see land aggression from China, now from Russia. There was definitely cold or a heated debate between US and China at that point of time. So definitely, I think this is the era of thinking with a closed mind. The wave of nationalism is so apparent nowadays in the world circle, and you get my point, right?
Yeah, no, definitely. I mean, you see that here, of course, as well, right?
Yeah.
I do think it's problematic.
Thank you so much. It was lovely talking to you.